Welcome to TradeTheMBI.com. This is John's report is for the 30th of April as we're about to end the month. Of course, right above that 50%. Magenta's still holding up well on our MBI readings, and not much change here from a DOC standpoint, though we do see a little softening of DOC red. So it does put some risk. It moves down towards the 50%, as long as the magenta is able to hold up. And of course, we'll see intraday whether or not it's able to do so. But we should be able to continue the push higher. Still not that great an improvement from a shakeout. Still haven't got to the positive side of things, and until that happens, and a lot of this is the status quo. You know, Trump just finished his 100 days. Touting the successes, but the reality is a lot of this stuff won't be known for another 100 days because you can't fire government employees. That's all tied up in court. A lot of the savings from Doge limited by the courts as well. So the only thing that's happening on the world stage is the tariff front, and even that, is catching a lot of resistance. But as deals are negotiated, at the end of the day, if you did nothing, you'd have the status quo of where things were. So any deal that's made is a net improvement, at least from a trade standpoint. So where you had nobody at the table discussing anything, you do now. So that's a change. Now, of course, everyone's expecting in the market inflation, all of these things. So, what happens when that doesn't take place? Well, that's going to be the interesting one. From a NASDAQ standpoint, you can see we already have steel reset on the DOC. So it's moved back below the cyan. If it continues to go lower, that's actually a net benefit to start out the month because then you'd have a full reset, in which case the NASDAQ would be the leader on any move going forward. Uh, it's going to be difficult, though, with the MBI weight where it is. Need to see that trail back lower, and that would mean that shorts have given up on it, and that gives free rein to the bulls to run with it. So we'll have to continue to see that dynamic. From a Treasury standpoint, of course, the Fed's not involved in any of this situation right now, and even after the Chinese tried to do the little dump of Treasuries to force a improvement in yuan price. Couldn't sustain that for very long, and obviously you can see the correction back to it has been normalized. And at the end of the day, you're still trading in U.S. dollars for most of the commodities around the world. So the fact that you've seen some depreciation in the dollar and that covering the tariff changes, the real impact is here. When you look at oil, the fact that we've seen this little bit of a decline, helpful. Again, you've got to get back into this mid 50 range or lower to really have an impact, at least for driving economic growth. But if you're in the right direction, at least so far, um, can it be sustained? That's the key. And the longer it's sustained, the better the numbers are going to look for everything. And that really is going to be the broader impact of things. So as long as that can be continued, and that's really the question, can you overcome all the hurdles that were set up before Trump came in? And we talked about this. We all knew this was going to be the second half of the year before anything really started to cascade forward. As long as the euro is in this particular situation with the elevation and the expectation of weaker U.S. growth, uh, it's negated any tariff situation as far as the EU goes because you just increased their purchasing power. So net zero from that standpoint. The same thing happened with a lot of other currencies, but that's going to start to equalize because if you don't have the inflation numbers, then what do you get? Well, okay, that's where it gets interesting. And I think that's going to be the market resolution going forward. We'll see. If the inflation numbers don't come in, gold's going to have trouble holding on to the gains that it's made. The expectation still is that there's instability. I think a lot of this is just hype, and a lot of people are getting caught into probably the wrong side of the situation. Now, the gold appreciation, though, broader, has just been the catch up to where things have been from the prior inflationary escalation that it didn't really resolve. But you're starting to see an interesting thing coming. A lot of people taking their gold in possession from futures contract, which means you actually have to supply it, which that changes the dynamic quite a bit. And if that continues to be the case, then I think you're going to see a pretty good shift in how gold is traded. Of course, Bitcoin holding on to its nice gains, and I think that it's going to continue to stabilize like this. You can see no real short activity going on within the futures of it, so it should continue to push towards, well, getting near the highs, at least towards that 100K number. ETH still lagging behind. Again, they've got other issues that they've got to resolve as far as network and various things like that. When we look at it from our intraday 50K tick chart here, we've got the MBI white that spiked, and we expect to move back to the 50%. We got that. It held up pretty well because magenta stayed right back above. Not until just right about now that we started to see a little bit of a breakdown in that. And it already, the lows moved towards the 50% already on there with not much activity from it there. We got a strong DOC spread, and while that started the cascade, you can see the major jump of orange spike. If that begins to trail back lower, we would expect to break out into new highs from it. So that would be just in time for new fund money to come in, lockup period ending for stocks. Intraday, not a whole lot of activity. There was an interesting thing that happened though in Europe here that was fairly widely reported. Of course, you had that entire country blackout in Spain from their grid, and what was interesting is they're trying to blame it on solar power and fluctuations in the grid from that standpoint, and that's not even close to what happened, because anyone who knows anything about electricity would know that the narrative that they're selling on this blackout story is not really valid, because in order to supply power to a grid, you've got to have the EU stabilization at the 50 hertz, and that maintains before you can even supply to the grid. That's already synced and recorded before it even goes in. So they had this oscillation failure in a cascade event. That means it happened far faster than their trigger signals, which is why it was able to create a blackout throughout the entire country. That's a systematic problem within a grid and every grid that exists. And if they don't come up with a real answer as to why that happened, you have to question whether or not the vulnerabilities of electrical grids around the world, if this was something beyond just weather event or this lack of solar power, which makes no sense whatsoever, because a drop in voltage that's accommodated by grid providers instantaneously, that wasn't it. This was an oscillation issue that's not supposed to happen, and we can get into the physics of why this took place. It doesn't really align with current models of physics, but when you get into the real particle nature of things, what happened is a far bigger concern that's really not being accounted for, so to speak, in the current lingo. But that being said, the market's still going to continue to blow these things off, because it doesn't seem to didn't affect any major economic situation, at least as far as a major economy. And if that changes, though, it'll be an interesting setup, because they don't have a resolution to it. Indicators, though, for May will be going out. And again, easy thing to do will be to go to the MBI homepage, and you can just click membership services. Payment link is already set in there. It makes things a lot easier. I'm probably going to be adding some other features on there, like past ELDs from like which is the easy language. So anyone, even if you don't have the indicator, should be able to go back and look at past months and be able to recreate the charts if you wanted to do some investigation on that, which would be helpful and nice for those that like to study how the indicators work and some of the pattern repeating effects that we get from our readings. Either way, it should be an exciting month. I think that we're going to start to get this disparity between the expected effects of Trump policy versus the reality. And if there's a difference between what the market expected, I think you could expect some explosive growth, and particularly even to the upside, mostly because they built in a lot of this fear factor for inflation and everything, and those don't materialize. You're going to see some big moves. As always, though, anything relevant, I'll put it on the Skype chat until we flip over to our Microsoft Teams. So we'll go from there, and we'll talk about that at the beginning of the month. As always, trade well. Have a good one.